right, guys, welcome back to Everything Business. As was promised, this is the second part of the 2019 paper, right? I had done from questions 1 to 3, right? And now we are at question 4. So let's just get right into it. All right. So as I said before, anytime you see a question, right, you must always read through the question. I also want to ask you guys to just click on that subscribe button. For those of you, if you have not yet subscribed, there's a little subscribe button right down there. So just click on it, right, and help send the channel through and the message through and help us help others. Understand? All right. So question number 4 of the 2019 paper, right? And this question is a receipt and payment question, right? So it says the Evergreen Golf Club offers life membership to annual subscription at an annual subscription fee of $3,600 per person. The following information is available for the Evergreen Golf Club for the year ended the 31st of March 2018. So they give us the opening cash balance, they give us the administrative expenses, right? The statement here that says for the annual social evening, right, 800 tickets were sold at a price of $250 each. However, payment has not yet been received for 30 tickets, right? And they don't give any figure because they expect you to calculate it. Then you have social evening costs, ground maintenance, staff costs. Then you have another item here that you'll have to read and calculate. It says the club has a total of 120 members, and 10 of them each had $600 outstanding in subscription fees at year end, and the remaining members were all fully paid up for the year. And then they have bar takings and then they have bar costs. They're saying now that you are required to prepare on page 17, which is this page over here, the receipts and payment account for the Evergreen Golf Club for the year ended the 31st of March 2018. Now we are doing the receipts and payments account. The receipts and payments account, right, is very similar to the cash book. Now, the cash book would record what? Money is received, money is paid out. And I want you to remember that when we are doing the receipts and payments account, we must only account for monies that we actually receive, monies that we actually pay out, right? That information is key to doing this correctly. So let us look at how we start. So you start with the heading, of course, right here. Then the opening balance, which is the balance brought down, right? And I know that they set it up different. Normally, you would use a T account, right, for the receipts and payments, but they set it up like this. So you're going to put the receipts first and then the payments afterwards. All right. Yes. So you start with the receipts and then you subtract the payments, right, to get the closing balance. All right. So we start with the opening balance of 1,000, right, 1,750. So there it is, opening balance, right. And so on the receipts, you have to account for all the monies that you are receiving. So the next item that is here would be the tickets that is receiving, right? So it says for the annual social evening, 800 tickets were sold at a price of $250 each. However, payment has not yet been received for 30 tickets. Now, if you look at what I have here, I have the $250, which is the price for the ticket. But only 770 tickets we actually received payment for. In the receipts and payments account, you have to account for the monies that you actually receive. So it's going to be 770 multiplied by 250, give us the 192,500. The next receipt that I can see here is bar taking. Right? Bar taking is basically the sales from the bar. So this is the money that you actually receive, and it's pretty straightforward, right? Then you have subscriptions. Now, subscriptions, this is another tricky item that can trip you up, right, if you don't remember the principle that I stated not too long ago. So it said that the club have 120 members and 10 of them had $600 outstanding on their subscription fee at the end of the year. Now, you should only record money that you receive. So you're going to record what you receive, right? So you have 120 members. The club fee is $3,600, right? And so if you do a simple calculation, right? So 120 members multiplied by 3,600, right, should give you 432,000. But then it says that 10 of them had $600 outstanding, which would be $6,000 outstanding. So you're going to subtract $6,000 from that 432, which would give us the 426,000 here, because you have to account only for the monies that you receive. Now, in the income and expenditure account, if that was asked, right, or if that is asked, then no, you would have to now adjust the subscription amount to reflect how much money you should have collected for that period. So you would have to add those members that are outstanding, the fees that are outstanding, you'd have to add it, right, and account for it in this accounting period. But you don't have to do it here, luckily, right? So you're good. You just do the calculation for how much you receive, which is the 426,000. So that you add up our income there, you get 674,750. Now we subtract our expenditure or our payments, right? I shouldn't even put expenditure. I should put payments there, less payments, all right? So our payments, right? Administrative expenses, we would have had to pay that, so that's a payment. Social events, evening costs rather, we would have to pay that. Ground maintenance, that is monies that we would have to pay. Staff cost, right? We would have to pay that as well, right? And so you have bar cost as well, 28,300. You would have to pay that as well. So your total payments, right, would have been 188,300, which you would now subtract from your receipts, and you have now the balance on the account, which is 486,450, right? I should not have expenditure here, right? Because not all expenditures are payable in the same period, so it should be payments, right? Yeah. All right. Very good. So let's look at the next question now. Yeah, so overall, I'll give this question maybe a 6 out of 10, right? It's not that difficult, really. And as a matter of fact, I'm not going to give it 6. I'm going to give it a 4. 4 out of 10. It's not that difficult, right? So moving on to part B of the question. So part B of the question, it says the following accounts information relates to selected transactions extract from the ledger of Thomas Gray, a retailer, at the end of February 2018. So we are given his receivables accounts, we are given S Lake account, which we are going to deduce. S Lake is a creditor, right, or a supplier. That's why I have a credit balance. Thomas Gray, right? Thomas Gray would have been the owner, and this is his drawing account, sorry. Then you have his capital account here. Then it says complete the form provided on page 19 using the information that is provided. And the first row has been completed for you as an example. So in column A, you have to give the name of the journal or the day book from which the entry was posted. And then in column B, you have to write a brief narration to describe or explain what transaction took place. This is very, very simple, very easy. I would say right off the bat, this is at like a 3 or 2, even in terms of difficulty. So they give the first example. So on the 28th of February, right, which is the 28th of February here, you would have gotten this information from the sales journal, right? From the sales journal, and then they explain the brief explanation here of you know, what the transaction is, right? So for February 12th, right, we would have gotten this information from the purchases journal, right? Remember that they asked for the day book or the book of original entry, right? Not the ledgers, they're asking for the day book. So you have to have a book of original entry here. That's what they are testing, you know, your knowledge of the use of the books of original entry, right? So you would get this information from the purchases journal, right? And the explanation is, you know, Thomas Gray bought goods on credit from S Lake. That's what happened. So you're just describing what happened. 17th of February, see the 17th of February here, right? You would have the general journal. So obviously, Gray would have taken goods out of the business, right, for his personal use, and that is the reason why it's drawings, right? And so you record it in the general journal, right? February 26th, right? The information you would get it from the cash book, because how you know it is cash book, because it's a bank here, so right. And this is the capital account, and you see money coming into the capital account, which means that Gray would have been investing more money in the business, and it paid it into the bank account. The bank account is kept in the cash book. So it says Gray invested $2,000 into the business, and that's 6 easy marks. So this question is very easy. The next question says Thomas Gray anticipates that 5% of his receivables in part B will prove uncollectible based on his account, right? He's anticipating a bad debt, right? So they're asking you to calculate the provision for doubtful debt at the end. So you have to just calculate 5% of the 7,000, which is 350, which is what we did here, and that's 1 mark, right? So you know that it's simple when you see it's only 1 mark. All right. So let's move on to the next question. As I said, this question is like maybe 2 out of 10 in terms of difficulty. Very easy mark. All right, now this question 5, the last question of the paper. Obviously, you know that this question is going to be a little bit more difficult than the other papers, the other questions, right? That's how the paper is normally set. You start from easy to hard. So this question is a company account question, right? Company account, it's a important topic. It's a topic that comes a lot, right? It's a little bit challenging because it uses company jargons and words that you may not be familiar with, but you have to take the time to learn these jargons, all right? So it says that the following is an extract from the books of Freight Express Company Limited that is taken on the 31st of December, right? We are given some information here like the share capital issued, right? We are told that ordinary shares of $1 were issued at $1, right? 150. 8% preference shares at $2, 100,000 we collected, right? We have retained profits, we have general reserve, we have retained profits for next year. Then we have some additional information here, which is 50% is to be transferred to general reserve, dividend of 20% proposed to ordinary shares, preference share dividend to be settled in full. Now they are saying in the space provided, draw up this statement of changes in equity for Freight Express Company Limited for the year end. And all that this is asking you is to do the appropriation account for the company. All right, so you start with your heading, right? Very important. You have your net profit after tax, right? With companies, when profits are made, then they normally subtract tax, which is corporation tax, from the net profit. So you will get this figure, right? So that you will get this item, net profit after tax, right? Then you normally add your retained profits from the previous year, which is you add your net profits from the year before, right? So which is 124, see there, you add it, you get 310. Then now all you're going to do is subtract your appropriations. Your general reserve, it is given here, $50,000. You are going to use the general reserve that is in the footnote, or the reserve information that is in the footnote, not the one that is given here, right? Normally it would be a trial balance, but it's not that one you should use. You should use the one in the footnote, right? The trial balance information will be used when you're looking at the balance sheet, right? So general reserve is 50,000, and then you also have to subtract your proposed dividends. We were told that ordinary a dividend of 8%, this 8% here, let me just, 8% preference share. So it is 8% is paid on preference shares, right? We have 100,000, right, for the preference shares. So 8% of that is going to be paid out as dividends. So 8% of 100,000 is 8,000. And then for ordinary shares, right, it is 20%. They had told us that it is 20%. See their dividend of 20% proposed for ordinary shares. So it is 20% of 150,000. You may wonder where I get that 150,000 from. It is right up here. See there? Right? So it's 30,000. So you add up all of these, you get 88,000 that you're going to now subtract from this 310,000 to get the $222,000, and that's 8 marks, right? The difficulty level of this question, I would say this question, it's only difficult if you do not understand company accounts. If you understand company accounts, it's not that difficult, because this took me less than 10 minutes to do, right? So I would say the difficulty level is about 5 or 6, right? And that is if you understand company accounts. If you don't understand company accounts, obviously it's going to be difficult, very difficult, right? Part B now. Part B of the question it says that the authorized share capital of Freight Enterprise, right, Company Limited is as follows. So they give us the amount of shares that were authorized, and for those of you who may not have known what we mean by authorized shares, we are talking about the shares that the company is able to issue, right? So the shares, the amount of shares that the company is permitted to issue is what we call the authorized share capital. All right. So for the ordinary shares, it is 250,000. For the preference shares, it is 1,000 preference shares at 8%. At 8%, right? And what that means is that when dividends are to be paid, they are going to get 8% of what was sold, right? Of the shares that were sold. So they're asking us to prepare the balance sheet in the space below. And so this is the balance sheet, right? And so, you put your heading, which is very important. And you have your title, financed by. Then you have your authorized share capital. So what you're basically saying is that the company is financed by share capital. I did not even have to have authorized share capital. I could have share capital here, and then I have authorized underneath the bottom to show that these are the amount that they are authorized to issue. And so you just put them, you're not going to use these figures, you're just stating how much ordinary share, how much preference share is authorized. Then you're going to state how much is issued. So you have the ordinary and the preference, and that we got this from the previous page, right? And then so it is, for the ordinary it is 150,000. For the preference share it is 100,000 were issued, shares were issued, right? And then we also need to add our reserves, right? So we had general reserve. In the trial balance we had 95,000 general reserve, right? And then in the footnote we had it stated that we are supposed to set aside 50,000 for general reserve as well. So we're going to add both of them to get the 145,000. Then we add the retained profits that we had from the appropriation account, which is 222,000. Then you get the 367,000 here that you're going to now add, right, to the issued share capital to get this $617,000, and that's the equity section of the balance sheet. All right, let's move on to the next part of the question. So let us look at this part C of the question 5. All right, so part C says for the Freight Express Company Limited, right, the industry averages for the year, right, were as follows. And then they give us some ratio, right, and then they're going to ask us to analyze these ratio. This is ratio analysis, guys, and if you don't know how to do ratio analysis, then look in the link, check in the link. There is a link there for my tutorial on ratio analysis. All right, so they're basically asking us to analyze these ratios. So in one column we are given Freight Express Company Limited's their ratios for the various types of ratios, and then they're comparing the company's statistics to the industry average, right? So they're asking us to just write one comment on the performance of Freight Express Company Limited and assume all other factors are equal, right? So we have to write. So the first ratio, which is the net profit percentage, this ratio actually shows how much profit is made for every $100 of sales, right? The formula for that is net profit divided by sales multiplied by 100. So this is what I wrote here. The ratio shows that Freight Express Limited is performing above average, as 40% of their sales price is profit, right? And if you look at the industry average, it's 36%, while Freight Company Limited is 40%. So they are performing above average, right? The second ratio is the current ratio. Yeah, the current ratio, it shows how well the business is able to cover its debts, right? The ability of the business to cover its debts should the business go bankrupt, right? And so if you look at the industry average, it is 2, right? 2 to 1 to 1, and then the Freight Express Company Limited is 3 to 2 to 1. Actually, a good current ratio is 2, right, to 1, or 2.5 to 1. And so you can see that the industry average is pretty good. However, for Freight Express Company Limited, it's not bad enough, right? When they say 2.5 to 1 and this is 3 to 2 to 1, it's not that bad, but it would show that Freight Express Company Limited is too liquid, and what they can do is to invest some of their cash, right? The third ratio is the return on capital employed ratio. It is the most important profitability ratio, or the most important ratio to a business, right? Because it shows how much profit is made on the capital invested, right? And so the industry average is 62%. Freight Express Company average percentage is 69%. That is good, right? And so this is what I wrote. Again, Freight Company Limited shows a greater return on investments, and this will attract investors. So what it means is that they are showing a greater percentage rate for investments or on investments, right? And that is what investors would like to see, right? So coming down now, it says regarding the current ratio position, make one comment on Freight Express Company Limited of an area for further investigation and or improvement. So I would have answered this question already, that they can invest some of their liquid assets, like cash, they can invest it, and that would prevent them from having too much cash in the business. All right, so that is it. That's 2019 paper, right? See you in the next one.